I've received an email yesterday from a lady, and I'll read it for you today and I'll deal with it. I'm talking to you, my lady. I can't mention your name because you requested to stay in confidence. However, let me go through your email and answer it. And I believe this is the situation of plenty of people in the market. That's why I decided to answer it publicly. The email says the following. Good day, Mr. Hani. If you have already addressed this concern, please redirect me to the relevant post. As a foreign investor, the market value of an apartment I purchased in JVC has dropped in resale value by 50% since a very large number of new properties came onto the market. Rental options are also reducing drastically as tenants scout the market for bargains on new developments. My property has been on the market since March 2017, and I now fear huge losses. I am frequently asked about my experience with property investment in Dubai by contacts looking to invest the same. It is wise to advise extreme caution given the, or is it wise, sorry, she's asking, is it wise to advise extreme caution given this massive downwards trend? Thank you for your advice. The answer is complex. By the way, I replied by asking some more details, and I got the details. So I asked about when was the purchase, or is it the first purchase, and the lady confirmed yes. I asked the reason behind the purchase, and it was the reason was investment. The lady bought this property for investment purposes, and it was both, as it seems to me, around the financial crisis or after that, so probably in 2011, 2012. And the last question is, what did you buy it for? 673,000 with a transfer and final amount costs. It's 99,000 dirhams. The answer is two parts. First, why did we buy a property always makes a difference whenever we're assessing is it a right investment or a wrong investment. Now, as I see, you've bought a property in a location where you decided to rent for the long run. You've held the property for a few years now. My personal opinion is that that property should be held beyond the number of years you held it to. Our industry is a cyclical industry. Thus, prices go up and down. Prices go up and down for many reasons. So some of the reasons are sentimental, are pure sentiment driven. Opinions of people, feelings of people, and how do they understand and trust the market and the prices going forward in the future. The other part is the intrinsic value of a property, the use of a property, and the other details that surround the new builds and many other supply and demand related matters. I believe that the price of the property can drop, and can drop sometimes significantly, but it shouldn't be a devastating situation whenever it drops if you have the ability to hold. Now, if you don't have the ability to hold that property, that becomes a problem, because then there is loss of value, similar to any asset that you bought and you can't hold beyond the time. If you hold the asset and drive the weight out, and there's plenty of examples for that in history, as long as you haven't purchased a property at perfectly the wrong time, and we talked about the wrong time many times before. Perfectly wrong time was probably few months in 2008. If it was your first purchase and you only purchased at that time, yes, the loss may be lived for a very long period of time. Anyone who haven't could have made his money back again in 2012, 2013, 2014. I believe the period that you've bought in, somebody made his money back probably and exited. And then when you bought at that time, there was a drop afterwards, a correction, which started between 2014, 2015 and afterwards. And it grew with time, came to support that correction with many other factors. The main, in my opinion, is sentiment. It's not supply and demand, it's sentiment. Because supply and demand is not a major factor. It is a factor, but it's not the main determinant. Whenever you are in a market similar to the market we're in, our market size and our market dynamics are driven more by sentiment rather than by anything else. You can talk about markets like London, and you can say that the most impactful thing over there is supply and demand. There is shortage of housing since I believe 83, and that shortage of housing because of zoning restrictions and other kinds of restrictions that are available, planning restrictions, is still there. That isn't the case with the whole country, by the way. That isn't the case with the whole of the UK. Now, is it a bad investment that you've done or a good investment? Personally, I believe it's a good investment. You've been getting rent since that time. You have a tenant who's paying rent. Yes, rentals do drop, and rentals can drop further. Rentals have dropped significantly since then. Let's say at the time you've purchased, you were making around 9%, I expect, on your property as a rental return. With time, that return compared to the initial purchase price could have changed. Now, even if it did change, it's still significantly more than you can make in many markets which are normal living markets in Europe or anywhere else in the world. Thus, if in a downtrend you're making, and after a drop of 40% in some cases, you're still making an amount of return which is above 3 to 4%, then you're in a great shape. Because in good times, in many countries and many cities, this is what you make at most if you get there, and many times you don't. So I believe you're in good shape on that. Yes, it's not matching the expectations that were by that time, but you're in great shape. The second thing is, and I understand that it could have been much better, that you would be in profit today on capital, but sometimes that's not possible. Now, you will be on great shape in that, but there's another add-on that can put you in a better position even from an income producing, from an income side and from a return side. If you had bought that property without 100% equity from your pocket, so if you would have taken leverage over the property, that possibility of return could have been maximized annually. So the positive cash flow that you will get would have been better compared to the money you've invested again. Now, that's not the case of everyone, and it's very important for us to realize that many people would like to put the cash in without any mortgages, straight in, they get the return, and they're happy with a consistent return. By consistent return, I mean that people should expect 4 to 5%. Whenever it goes up to 6, 7, 8, 9, whatever it is, understand please that this is non-sustainable through bust and boom. It's a cyclical market, it will go down and it will go up, and it will continue fluctuating and devaluating and depreciating. And this is something that can happen. But as long as I'm getting 4 to 5%, I'm getting better than many investments that do fall in the same category. Many investments that do fall in the same category of risk. Yeah? So I believe that you are in good shape. I believe that your property should be held further, shouldn't be sold, unless you have a better investment where you can recover whatever probable loss you do have now. If you lost 20, 25, 30% of the capital today in a sale today, then that money, if possible, to be invested in something that can grow faster and with the same risk profile and generate the same returns on an annual basis, then probably you're better off doing that. If it can't, then I advise you to stay in your investment. Do not sell and run away from an investment just because it's sick for a few days or a few years in our case here. It's painful, but it's normal. And anyone entering that investment should understand that before he starts with that investment. I hope I've dealt with most of the concerns that were there. The last one is, shall you advise people, one, asking you about investments in Dubai, to do it or not? And by the way, as I understand, concern of a foreign investor, this is the subject, so I believe you're not living in Dubai. I believe that you can still tell people, specifically taking caution and approaching an investment the right way, with the right people, with the right advice, with the right knowledge, and with the right research. However, people can still see lucrativity in the investment you've done. So it could have been much better, and it could have been much more profitable, and it may be much more profitable in the future. However, it's still not a bad investment. So, yes, people should still do similar investments. And yes, people can still do similar investments and call it a profitable investment if they take a specific good enough period of time. And that period, by the way, can be 3 years, 5 years, 7 years. The most important is that the market or the trend doesn't catch you on near the bottom or after a big drop. If at that time you want to sell any asset, you will lose money. I would love to get more of your questions. I would love to deal with more of your concerns. If I can help you doing that, and I'm so pleased that the lady that you have emailed me, and I hope that I've answered those concerns. I'm available, by the way, on email again, on anything you need. Leave your comments, please. Leave your further questions, and stay safe, invest wisely, and make your day a great day. Thank you.